Well, good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today is, what is today? Today is Tuesday. Is it Tuesday? Yes, today is Tuesday. It's the 16th of February. Man, oh man, time gets away from me. The market pre-open, we're going to be opening up in about an hour and 45 minutes. I just came back from Miami yesterday. Wanted to get in nice and early and give you guys a good update back from my office. Now, let's look at the markets. We're going to open up a bit stronger, about almost 200 points on the Dow, 70 on the E-mini. The markets are strong, and there's no stopping us. I mean, let me show you this chart. And folks, I'm going to tell you something right now. I'm shamelessly going to tell you that the market is grossly overbought. Now, is it going to pull back? It's definitely going to pull back to the 50-day moving average. The question is when. There's just so much stimulus and so much bullish impact coming to the market with this $1.9 trillion potential stimulus, and the fact that COVID rates are coming down. As far as global economy, we don't have big news today. Today people are going to be coming back to work. It's going to be a fragmented day. Anytime you have a day or two off on the week, you're going to have some fragmented weeks. But tomorrow, markets will come back to normal, more or less. So if you see wider spreads today, I wouldn't worry about it too much. We've got FOMC minutes tomorrow. They're going to talk about the bond market. We've got retail sales tomorrow, which is huge. And we've got PPI. The big report is going to be retail sales and what the Fed tells us. But this Fed does not hold things close to the chest. The reason I'm really concerned about what the Fed tells us is the bond market. As you could see here, the bond market is going down. It's getting weaker, it's weakening, it's breaking down. And the fact that bonds are breaking down means long-term rates are going up, which means the curve is lengthening a little bit, and that could mean inflation. So keep your eye on that. Now, as far as global economy, let's go through what we have on the table today and what's driving the market right now. So global shares are higher. Yesterday was a holiday. We had President's Day. Despite data showing regional economies have been hit hard by the pandemic, investors are still sending indexes even higher. As you could see right here, I mean, look at this. We're going to open up 0.52 higher, and we're at all-time highs right now. And this is a very smooth line. The only thing that's wrong with this thing is we're diverging. And I've talked about that quite a bit, as you will see here. Notice, look at this. We're going higher here, right? We're going lower here. We're higher here, but the RSI is barely at 70. We're here at 3,570, and the RSI is at 89. And here we're at 3961, and RSI is barely at 70. That's negative divergence. Lower highs, higher highs. And I've showed you that several times. As a matter of fact, I think I have a freestanding chart here with the SPY. Yeah, here it is. You can see here, higher highs, lower highs. That's major divergence, narrowing of momentum, and that usually precedes a pullback to the 50-day moving average or lower, which I am expecting any day now. Vaccine rollout is starting soon in Japan, which is great. Nation that's lagging behind US and Europe with inoculations. It begins with about 20,000 medical workers, followed by 3.7 million people. Medical workers. Thank God. The more people around the world can get this vaccine, the faster we'll get rid of this COVID. The government's goal is to have shots available for elderly people in April, which is when US is expecting to have shots for most people. Optimism remains high over stimulus measures, including trillions of dollars more from US government. Some companies have released surprisingly positive earnings report. Don't you think I've got you covered on that front too? Let me give you the latest. So far, we've got about 400 companies have reported. So far, they're up about 83, 84%. Which is not about 80, not 84. 80% are beating earnings per share. We've got report for a total of 83 to 85 members. 77% are beating estimates, but you got to remember, we've had 3 quarters that these numbers have been beaten down to death. Where we're seeing some really good upside, I hate to say I told you so, technology. 86% of the sector's market cap is out. Total companies are up 21% from a year ago. 14% higher revenue. 86% have beaten earnings per share. Looking at the fourth quarter as a whole, positive 2.9% on 2.6 higher revenue. First positive quarter in 3 quarters. That's amazing. First one out of the last 3. This is the first one. So we've had 3 negative quarters, first positive, next one's expecting to be a big one. Now here, you want to write this down. Here are the low-hanging fruits. Where did we have positive earnings surprises? Autos, construction, basic material, finance, technology, medical, and retail sales. Let me say it again. Autos, construction, basic materials, finance, technology, medical, and retail. Where did we have really, really bad numbers? Energy, consumer discretionary, which is surprising, and the aerospace sector. That's negative, negative, negative. Now, as you could see here, financial is not number 2 now. It's been overthrown by technology. But the fact that technology and consumer discretionary are apart from each other is telling me that markets are fragmented again, which is what I showed you by the fact that we continue going higher, but momentum levels just can't keep up. That's dangerous territory, folks. And that's telling us that the market is fragmented and it's going to snap back. It's just a matter of time. Now, my focus would be in the technology sector, in the industrial sector, and in the basic material sectors. But there are some sectors showing upside. In terms of overall market, I've got 2 assets to look at. I'm getting a little nervous on the broad market. I like Bitcoin. This is the Bitcoin Investment Trust, ticker symbol GBTC. You could see here, it trades just like a stock. And if you look long term, it follows Bitcoin. And right now, it's at all-time high. It's congesting. And if it breaks this level, the 48,000 level, there's a good chance we'll go higher. And that's where we're at right now. Last time we've been here was beginning of this year. It was about, let's see here. Yeah, about a month, actually about 5 weeks ago. So we broke down and now we're coming back up. And if we could take this level out, we're going to be moving higher to the next level, which is about the 55,000 level. So keep your eye on Bitcoin, ticker symbol GBDC. And if you don't trade the actual Bitcoin, if you don't know how to open an account or whatnot, you could trade it using this asset, Bitcoin Investment Trust GBDC. It trades tick for tick. Now, so I like this one, and I like this Mosaic company. What do I like about it? World's leading crop nutrient companies focus on potash, phosphate, 2 of the most vital nutrients, mines, crop nutrients. 1-year return, 43%. The stock has been doing well. Basic materials. Let's take a look at the chart. Look at this nice flat breakout area. I like, as you guys know, if you guys follow me, you know I like alternate waves. Not alternate waves, alternate trading waves. So you have vertical, horizontal, vertical, horizontal, vertical, horizontal. The longer something stays vertical, the higher the odds it'll turn horizontal. The higher the odds something moves horizontal for the longer period of time, the higher the odds it'll move vertically. The odds are now this will move higher because it's been moving for a while. It's been congesting. Whenever you have a congestion, you have lower risk and higher opportunity for profits. Whenever you have a vertical move, you have more volatility. More volatility, more risk. Congestion, less volatility, less risk. You could figure out the rest yourself. The asset is making multi-year highs, you could see here. This is now, last time we were here was, let's see here. Oh yeah, 319. So we're talking 2 years ago. This is like a 2-year high, and I love this base. See, I love these bases because we have, just like here, see this base? And then you have a breakout. You see this base? And then you have a breakout. So I like these breakouts because they lead, these congestions, because they lead to breakouts. And right now, I'm looking for Mosaic to break out above the high, and I would just put a stop loss right here at the last swing low, right around the 25 level, enter right around the 29.60 level, and that would get me into this trade. So ticker symbol MOS, Mosaic Company, and GBTC, Bitcoin. Tech, a little overbought right now. Overall market, a little too high for me. This divergence I'm not happy about, so I want to find assets that are not overbought. And I like Bitcoin and I like Mosaic. Now, before you go, right now, folks, right now, massive hedge funds, institutions, banks, they're all gearing up to take over the market with algorithmic trading. What have I been telling you for the last several years? Algorithmic trading, and algorithmic trading. How do you think I find all these? Algorithms. Look, algorithms. Volume spike, 90-day breakout, RSI, 90-10. Algorithms. It's all algorithms. All algorithms. So, and these algorithms, folks, If you continue using age-old analysis, these algorithms are going to leave you in the dust. According to CNBC, you got to hear this. These algorithms are already dominating over 80% of today's equity markets, far outperforming traditional stock picking strategies. They're going to leave you in the dust. This is why we've been killing the market. Algorithms. But there's still hope left for everyday investors like you. I've developed an algorithmic trading machine that at-home investors just like you can use without needing to own millions of dollars in upfront capital or have the best programmers available to you. You could do without all that. Click on the link below. Learn how Storm System can help you not only get ahead of Wall Street, but potentially supersize your trading account. Algorithms, algorithms, and more algorithms. Join the future, folks. Nobody's going back in time. Warren Buffett has been underperforming. Why? Because of algorithms. Value investing? Algorithms. That's where the money is. Momentum and algorithms. Make sure to like this video and subscribe to this channel if you're watching it on YouTube. Stay ahead of the market by being the first to be notified when we post new videos. And don't forget, follow the link below to learn about my Storm System. It can help you not only to get ahead of Wall Street, but potentially supersize your account. Who does not want to supersize their account? Everybody does, right? You guys have a great day and leave me comments and feedback. I love hearing from you guys. Bye, everyone.